Liquidity. It's not just a setting on your blender. In personal finance, liquidity means how quickly and easily something you own, an asset like a stock, bond, or home, can be turned into cash. Liquidity matters, especially when life throws something unexpected at you, like a medical bill or a costly car repair, and even planned expenses, like a vacation or down payment. So, let's look at common financial assets from most liquid to least. First up, cash. You can access it right away with a debit card, transfer, or ATM. That's why bank accounts, like checking, savings, or money market accounts, are often where people keep their emergency fund, enough to cover at least 6 months of expenses if needed. But here's the trade-off. These accounts usually don't pay much interest, so keeping too much cash there could mean missed opportunities to grow your money. Next, bank certificates of deposit, or CDs. They typically pay more interest than cash accounts like checking or savings, especially longer maturing CDs. However, CDs lock up your money until they mature. Cash out early, and you might lose some interest or pay a fee. Equity investments like individual stocks or equity ETFs or mutual funds are considered liquid since they can usually be sold quickly, but sales must settle before the cash is available. Selling could result in a loss, trigger taxes, or impact your long-term financial plan. Bond and bond fund investments can be sold, but they may be harder to sell quickly at a fair price compared to stocks. And like stocks, selling them could mean a loss, owing taxes, or changes to your future financial goals. At the far end of the spectrum, real assets, like real estate, cars, or art. They can take some time to sell with bigger costs and more complexity. Estimating how soon you might need cash and the amount you might need can help you build the right mix of liquid assets and keep you flexible and ready for both surprises and opportunities. That's liquidity, a simple but essential part of financial planning. Thanks for watching, and stay tuned for more Translation Please.